Myself, Vaibhav. In today's session, we are seeing the positive risk-on sentiments prevailing in the broader market, and we are seeing the same kind of sentiments in the USD JPY as well. We are seeing renewed weakness in the JPY, even in European trading hours. We saw a spurt on the higher side, and the USD JPY has been able to hold above the 103.5 levels. And I feel this is a kind of consolidation phase where the USD JPY might turn the corner, and we are more likely to see it reviving its bullish tendencies and trying to climb back above 104 levels in coming sessions. If we look at the trading context for the day, the start to the week has been fantastic. We saw more than 1 percentage point gains in the major equity indices, both for the Asia as well as the European countries. And now, as the US session is getting underway, we are seeing the similar risk on sentiments prevalent in the US equity indices futures, and we are likely to see the gap up open closer to the 1 percentage point, and two main driving factors are driving this rally, and we have this conclusion of the Brexit negotiations, and also the US pandemic relief package has been passed, and both these developments have reduced the uncertainty, and as a result of that, more buying is being seen in the equity markets. On the data front, we are scheduled to get the last Fed manufacturing index for the United States. And here we are expecting the softening of the manufacturing sector. And as a result of that, the last Fed manufacturing index for this month is likely to drop towards 2 compared to the prior month's reading of 12. So the December is likely to show the weakening of the manufacturing sector. Moving on to the technical analysis, we will first cover the technical developments for the USD JPY, and then we will see what's happening in the dollar index. Let's start with the USD JPY's technical outlook. This is the daily time frame chart, and for last more than half a year, we have seen the formation where the USD JPY has been forming the lower highs and lower lows, but this time around it has made identical low, not exactly identical. This low is of course lower than the prior swing low, and also on the higher side we don't really have any fresh new swing high. So we can't really say if the USD JPY is going to turn the corner and change its longer time frame trend. We can't say that yet. But after seeing its support buying momentum on the lower side closer to 103, and its extended consolidation closer to 103.5, I feel in the near term we are more likely to see the retracement, which might take it closer to the resistance zone of this downward trend line, and we can expect if the price momentum sustains, it might try to hover above 104 and go till this resistance level. So if that is the possibility, I think it will be better for us to look for buying opportunities for the long trade. So we will see if there are any optimum opportunities in today's session. If we look at the lower time frame charting of the 4 hours, we have this regression curve which is still tilted to the lower side. But one key development is this price action moving in the upper band of this regression curve. And as a result of that, we are more likely to see the flattening of the regression curve if the price action is sustained. And on the lower side, we also saw the buying momentum kicking in closer to this first support of this month's period point series closer to 103.1, and after that touch down here we saw again the USD JPY climbing back and hovering closer to 103.5, and I feel it might even try to sustain this retracement and try to climb back closer to this prior swing high and also the central pivot point. This area is likely to act as the major resistance, the price zone around 104.5. So we are not really expecting any breakthrough straight away, but till that level, the upside momentum is still there for the USD JPY. So if we want to figure out the optimum entry and exit, I think we will have to rely on the confluence of these three key SMS. SMS, we have the 50, 100 and 200 SMS, and we also have this golden formation in place where the 50 SMA has recently crossed above the 100 SMA and the 200 SMA. And on the lower side, in today's session itself, we saw some buying momentum as the price dipped closer to these 200 SMA. Then we saw this sharp turnaround, and I feel now moving forward, we can use these 200 SMA as our near-term support. As long as the price is holding well above it or closer to it, we can continue to look for buying opportunities while keeping the stop loss bit lower than the today's low. The stop loss anywhere closer to 103.35 or 103.40 should be good enough if we are looking for buying entry closer to this 200 SMA, and the price zone of around 103.5 is going to be a good bet from the risk reward perspective, as well as we are expecting the USD JPY to climb back above the 104 in coming sessions. Moving on to the dollar index technical outlook. This is the daily time frame chart, and the dollar index is also telling a similar story. We are seeing some retracement momentum prevailing in the dollar index. The dollar index has been in bearish territory for quite a while, but on the lower side, after this sharp decline, we might experience some profit booking, and as a result of that, the dollar index might try to come back closer to the 91 level. So here we have this 4 hourly chart where we have seen the dollar index finding support closer to the second support of this month's pivot point series, and also the regression curve is now flattening, and both these pointers are telling us that we have some buying momentum, buying support closer to the second support, and as long as the price action is holding well above it, we can continue to look for some buying opportunities while keeping the stop loss just right below this immediate swing low, and that makes the stop loss closer to 89.5. And if you want to take that kind of risk, we will of course have to target bigger move on the higher side. So if we are going in for the buy entry anywhere in the price band of 90.10 to 90, while keeping the stop loss closer to 80.60 to 80.50, I think we will be getting the desired risk reward ratio, as we are looking for the retracement to continue till the levels of 91, and even beyond that the possibility is still there. But if we see the break below this today's low, then I think there won't be any point in going for fresh buying opportunities. So watch out for price action in today's session. As long as today's low is intact and the price action consolidates, and if we are fortunate enough to get the entry anywhere in the price band of 90.10 to 90, we will have the excellent risk reward ratio, as for a risk of around 40 to 50 pips, we will be able to target 80 to 90 pips on the higher side. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Do subscribe to the Ducoscopy webinar channel to stay updated on the market developments. Goodbye.